They say the market rewards the bold. But Julian Robertson knew something deeper. The market doesn't reward boldness. It rewards controlled boldness. He didn't gamble his way to billions. He constructed them, piece by piece, rule by rule, mistake by mistake. Because behind every great fortune lies a mental framework, and Robertson's was built not on luck, but on discipline. He didn't trade stocks. He traded structure. And that structure began with 3 rules. Rules that transform small bets into a multi-billion-dollar empire called Tiger Management. But before those rules came the mindset. Robertson started small, very small. $8 million of capital, modest by Wall Street standards even in 1980. No massive backing. No AI. No high-frequency trading. Just intuition, analysis, and iron will. He built Tiger during a time when volatility was a way of life. Inflation was roaring, rates were unpredictable, and fear was currency. And yet, he saw opportunity where others saw chaos. How? Because Julian Robertson understood something. Jesse Livermore preached decades earlier. The big money is not in the buying or the selling, but in the waiting. That waiting wasn't passive. It was strategic patience. Rule number 1. Wait for the perfect prey. Like a tiger, Robertson didn't chase every movement in the jungle. He observed. He studied. He prepared. He called it concentrated conviction. The art of going big only when your edge is real, not emotional. Most traders scatter their energy hundreds of small bets. Endless noise. Robertson condensed his focus into clarity. If he found a trade that aligned with his deep research, macro conviction, and psychological calm, he'd attack it with size. But until then, he'd wait in silence. That first rule became the foundation of Tiger's empire, and the blueprint for disciplined aggression. Because waiting isn't weakness. It's the confidence to say no until the odds whisper yes. Think about it. Every failed trader you know, maybe even yourself, has broken this rule. Trading boredom, overtrading conviction, turning patience into impulse. But Robertson? He built his billions by doing what others couldn't, holding his fire until the probability felt inevitable. That's what makes Julian Robertson's legacy more than financial. It's psychological warfare, between impulse and instinct, between noise and knowledge, between chasing opportunity and becoming opportunity. So let me ask you, if you had the patience of Julian Robertson, how many bad trades would you have avoided this year? Drop your answer in the comments, because this was only the first rule. In the next section, we'll step into the paradox, the inner conflict between conviction and fear, and how Robertson mastered it while the market tried to break him. Here's the paradox that defines every great trader. The market rewards conviction, but it punishes arrogance. And in between those two lies the razor's edge where Julian Robertson lived. He called it the burden of belief. The idea that when you truly see an opportunity, when you've done the homework, built the thesis, felt the pattern, you have to bet big enough to make it count. That was rule number 2. When you're right, be right in size. Now, that sounds glamorous, powerful, but in practice, it's terrifying. Because conviction isn't a feeling. It's a test of faith under fire. Julian Robertson used to say, if you're going to swing, swing big, but only after you've earned the right to do it. That right didn't come from emotion. It came from research and restraint. He and his team would spend weeks, sometimes months, dissecting one idea. They'd interview management, study global correlations, even map out geopolitical risks. And when every piece aligned, he went all in. Not half in, not cautious, all in. That's the paradox. The same discipline that kept him patient, demanded aggression once the target appeared. Most traders can't handle that shift. They're either always cautious or always reckless. Julian could toggle between the two states like a master, and that's what separated the predator from the prey. It reminds me of something Jesse Livermore said long before Robertson. It never was my thinking that made the big money. It was always my sitting. Robertson took that idea further. Sitting, yes, but sitting on conviction, not on fear. He'd wait until he could feel the imbalance in the market. When others saw uncertainty, he saw vulnerability. And then he'd move with precision. But conviction has a shadow. The more right you've been, the more dangerous your ego becomes. And Julian knew that. That's why his second rule came with an invisible counterweight: humility. He warned his traders, you can't marry a position. The moment you do, it owns you. That was the paradox he lived every day. How to believe deeply without believing blindly. There were times he'd watch a position move against him, millions in red, and still remain calm. Not because he didn't feel fear, but because he had trained himself to separate information from emotion. He'd say, if the facts change, so do we. No ego, no pride, just clarity. And that balanced conviction, with humility, became the lifeblood of Tiger Management. That's why his traders followed him with almost religious loyalty. Because they knew he didn't just preach risk management, he embodied it. But here's the tragic truth. Even the strongest conviction eventually meets its limit. Because no matter how disciplined you are, the market always finds your breaking point. And for Julian Robertson, that breaking point came at the height of his power, when the rules that made him a billionaire began to collide with the madness of a world that had stopped believing in fundamentals. If you had Julian Robertson's conviction, would you hold your position through chaos? Or would you cut it the moment fear whispers in your ear? Comment below, because in the next section, we'll uncover the final rule, the psychological trap that even Julian couldn't fully escape, and how it reveals the most brutal truth about trading itself. Every trader believes they can survive the storm, until the storm stops playing by the rules. Julian Robertson's third rule was born in that storm. He called it, never fight irrationality with logic, because the market doesn't have to make sense to destroy you. It just has to stay insane longer than you can stay disciplined. In the late 1990s, Robertson was at his peak. Tiger Management controlled over $22 billion in assets. His fund was legendary. His reputation, near mythic. He'd outperformed almost everyone on Wall Street for 2 decades. But then came the dot-com bubble, a time when speculation wasn't just rewarded, it was worshipped. Companies with no earnings, no cash flow, no logic, were doubling overnight. Robertson refused to play that game. He believed the madness would end. He was right, but far too early. His short positions bled. His investors lost patience. And the man who had mastered discipline was crushed by it. He shut down Tiger Management in 2000, not because he'd lost his touch, but because he refused to abandon his principles for popularity. That's the third rule. Survive your principles, even when the world punishes you for keeping them. Now think about that. It's easy to preach discipline when the market agrees with you. It's easy to hold your edge when people call you a genius. But what happens when your discipline makes you look wrong? When sticking to your rules costs you everything? That's where most traders break. Not financially, but psychologically. Robertson once said something that almost sounded like confession. The market can stay irrational longer than you can stay solvent. But behind that humility was an even deeper truth. He wasn't talking about money. He was talking about faith. Faith in logic. Faith in timing. Faith that fundamentals would eventually return. The psychological trap for all great traders, including Julian, is believing that the market must reward rationality. But it doesn't. It rewards adaptability. And that's the bitter paradox of mastery. The smarter you are, the harder it becomes to bend without breaking. Julian's story didn't end in ruin. His students, people like Chase Coleman, Lee Ainsley, and Andreas Halvorsen, went on to build the next generation of hedge funds, known as the Tiger Cubs. His philosophy lived on, mutated, refined, adapted. They learned from his third rule. You can't control the market's madness, only your reaction to it. And sometimes, the greatest trade you'll ever make is surrender. That surrender wasn't weakness. It was evolution. Julian stepped back, but his legacy grew. Because his blueprint wasn't about trading perfection. It was about trading truth. He proved that wealth built on principle will always outlast profits built on hype. He showed that survival is the truest form of strength. And he taught an entire generation of traders that mental architecture, not market prediction, builds empires. So when you sit before your charts tonight, remember, the market will test your analysis. It will challenge your conviction. But most of all, it will tempt your psychology. And the traders who last are the ones who think like Julian Robertson, patient in action, aggressive in conviction, humble in defeat. Comment hook. If the market turned irrational against you for months, would you stand by your principles or bend to survive? Comment below. Because in the end, the question isn't whether you can win. It's whether your mind can endure.